What's good, everybody? Happy Tuesday already. Switch to a different mic today. Make sure maybe someone could give me a heads up if it's bad, good, or whatever. Welcome to the Closing Beat. This is a quick show that we do to cover the stock market's sort of daily goings on here. We're financial advisors here at Jazz Wealth Managers. We manage long-term retirement accounts, long-term investment accounts. We teach along the way. We have a video library coming up so that you can learn about your investments, maybe outside investments and things that you're working on while we manage your long-term investments. This Thursday, we're going to do an open house. We'll actually be live here at 8 o'clock at night on Thursday Eastern, and I'm thinking about showing maybe something new that we're going to be pushing out to our customers there just to give you an insight. So if you want to know some geeky stats, maybe if I have it ready, I'll do it on Thursday for the open house. But if you're just curious what it's like to work with us, we'll be here. Okay, let's get started. You can see on the screen there off to your right-hand side that the Dow was higher by another 151 points today, just over 0.5%. S&P gained 1%, and the Nasdaq 100 gained about 1.7%. Really strong day, actually, for the Nasdaq. Now, we're going to cover a few things here. I'm going to try not to make this too long, but we're going to cover a few things. Let me dive in to the overall. There you go. The charts there. On the S&P 500, you got some really cool things going on here. You have a moment in time where both the people betting on the markets going higher, they're right. The people betting on the markets going lower, they're still right? So nobody's officially lost if you want to call it a temporary battle. We remain up here at this resistance area. 2,600 on the S&P is the number everybody's looking at as a known resistance area. Peaked above it a little bit today. I think it could still be choppy. I hope I'm wrong and we just go higher, but I do think it'll be choppy in here around this area as people make adjustments. So we still haven't worked our way out of the woods there. The Nasdaq pushing just a little bit above the 50-day moving average, still very much in a downtrend, and there's actually a 52% chance that the Nasdaq and the S&P trade below this low over here. I was going to do a whole thing for our customers on that one to kind of outline that, but just know we're not out of the woods just yet. If you follow the Dow, you know we're right there, right at resistance as well. The technical traders like to look. Whether you believe in it or not, you have to recognize that people are believing in it right now. So you see 2,600 on the S&P, you've got 24,000 on the Dow. Oops, wrong one. That's Bitcoin. So you have the known resistance area, and that continues here in the markets. Earnings are going to be the driving factor there, what pushes us above or below. Market-wise today, you had oil strong, actually another 3% gain on oil, but it's still stuck right at that 50-day moving average. Technical traders on the price of oil will definitely be watching that. I believe that the commitment of traders data is still delayed or not even coming out. So there's a lot of intraday uncertainty. I tried to highlight that in the notes if you read through the description there. That is something that people normally focus on. I don't think they're still getting that data thanks to the shutdown. So it's causing if you look throughout the intraday charts there, 2 and 5 minute, you see a lot of people going, well, I don't know what to do there. We are at a resistance area. We're not really getting anything done there. So oil for the moment just remains stuck, in my opinion. Healthcare back above the 200-day moving average today. So this is the healthcare sector. This is the XLV. It's an ETF that I use to look at the healthcare sector. Back above the 200-day moving average. Got a little help from United Healthcare. We'll talk about that one in a moment. Remember what we said about United Healthcare yesterday? Well, actually, all of the earnings stocks that we covered yesterday. So that's actually pretty interesting there. Healthcare, one of the stronger areas in the markets today. Communication services, if you follow that, that's also steadily now above the 50-day moving average, right out of a downtrend there. And then the dollar. The dollar tried to rally again today and pulled back. Interestingly, we're going to do this? We're going to do this. Okay, so if you follow the dollar recently, I just watch it. I don't talk about it a lot. It's not very exciting. If you follow the dollar, it's been pulling back here lately. And anytime you see a sector, a commodity, a currency making a sort of change, a possible change in trend, you ask yourself, what do I do with that? If I'm a short-term, mid-term trader, long-term investor looking to reposition or something, what do I do with that? Well, when the dollar's weak, you look for companies that have a lot of exposure elsewhere, not the U.S. Look for exposure elsewhere. Now, it brought to mind when the tariffs became, when they started with those tariffs there, we talked about companies that had a lot of international exposure. In particular, Asia we focused on there. So companies that sort of come to mind here that have a lot of international exposure are names like Intel. So Intel's got about 80% of its business not here in the United States. Only 20% of its business comes from here in the United States. eBay, it's not a name that gets talked about a lot. I remember we talked about it during the tariffs there. 60% of their business comes from outside the U.S., so that's interesting there. Microchip, just to kind of stay in that tech spacey area there, a decent day today. They're the same, right, as far as business coming outside of the United States. Now, when you look at something like Intel with 80% of its business outside the U.S., you would expect to see Intel doing well, right? Or start to sort of move higher based on the weaker dollar as that becomes more and more prominent in the news. 80% of their business outside of the U.S., and if you're a fundamental trader, you look at their PE ratio, you go, well, that's 12, right? It's trading at a PE of 12, and the average in the industry is about 25 to 27. I think the average is 27 something or other. And so you go, well, that's a discount. That's not me telling you it's a discount. That's Intel telling you it's trading at a discount. Here's the thing, though. It's a slow mover, right? So not to get off track today, but Intel's a really slow mover. So you don't look at that as a growth stock. But if you're looking for a discounted stock, you go, okay, well, it's discounted valuation-wise. It's cheaper than its competitors, NVIDIA, AMD, valuation-wise, and it pays 2.5%. So as you put things together, notice where we went from that. I'm just rambling here. We went from the dollar being weak to where to find something to do. What's interesting there? So eBay, I'd also point out, if you look, this is going to pop up as their earnings come around here. If you look at eBay, 60% of their business comes from outside the U.S. That portion of their business, right, that 60% is growing more than the business that they get in the U.S., actually growing 7% year over year. So what happens there, sorry to just throw stuff at you. What happens there is, as people pay attention to that, look, I watch JP Morgan, Goldman Sachs, Merrill Lynch. I watch all of the sort of communications they send out to their customers. They send it to their customers first, then they announce it to the public. And what they're talking about right now is eBay growing everywhere besides the U.S. So if you look at a chart like eBay, number one, you go, dollar's weaker. That helps. If that continues, that will continue to help. The business outside the U.S. is actually growing when a lot of other areas around the U.S. are not growing. And add to that, you got a downtrend. Look at this really clean downtrend. If you're a technical trader, you've already done your valuation sort of analysis there. You look at this downtrend here and you go, okay, I see that it's breaking above this recent downtrend, but I also see that for the past, I don't know, what is that, October 20th through now, it hasn't sold off any more. So think about it. There was pressure. And then when the stock market saw the most amount of pressure, eBay saw no pressure. So put these little pieces to the puzzle together, you realize, hey, the selling's done in eBay. The fundamental analysis is done. It's being picked up on by all the big time, what do you call them? Banks, investment banks and all that stuff. They're picking up on this. They're noticing this change in trend. So, hey, just thought, I'd help you notice the same change in trend. Anyways, we'll keep track of that stuff. I love looking at that sort of interestingness. Where was I? So JP Morgan, they reported earnings today. They were below Wall Street's expectations, really not that impressive. Revenues came in lower. Investment banking was lower, not as bad as Wells Fargo, which we'll get to in a second. So wealth management, investment banking, some of the weakness in that sort of stock there. The interesting thing is, if I could just point this out real quick, if you go back 2 quarters, and for some reason, if you happen to watch these videos 2 quarters ago, we were saying, wow, the banks are reporting their earnings, and isn't that amazing? The banks were good, but they were getting sold off. Then the following quarter, last quarter, banks' earnings were good, decent, and they were getting sold off. So notice what's happening this time already. We only have a handful of banks reporting, but is this a change in the sort of temper of the the investor that's looking at the banking stocks? Earnings were not great for JP Morgan. They weren't horrible. It wasn't impressive. And yet the stock finishes higher. Wells Fargo can't say the same thing, but Citi from yesterday, they could say that. Look at how much it's gained in the last 2 days here. What's 7%? Earnings okay, right? We got Goldman Sachs coming up. Who else? Bank of America, BlackRock, things like that, and PNC. And so already we're seeing earnings not great in the banks, but they're getting a bid, meaning they're getting bought up. So JP Morgan a little higher. Wells Fargo was lower on the day, basically still stuck in the range. If you follow this sort of thing, it really accomplished nothing overall. Look, that whole sales practice scandal thing, that still haunts them. And now they're still going to be under the Fed's asset control, asset management. Like they can't bring in any new asset or up to a certain level of assets till the end of the year. That was supposed to be announced today that they were going to be lifting that restriction, and they did not. The point being, just notice how bank stocks are not really blowing us away so far with earnings. Still a long way to go, but they're not blowing us away, and yet they're still moving higher. Okay, I did a lot of rambling here today. You got Delta Airlines basically flat on the day. Earnings and revenue basically right where they were supposed to be. They're just, I don't know if you guys want me to cover that stuff, like tell you it was $1.44 versus $1.67 extra or expected. I just figure, do you care? Guidance, right? They guided lower. So initially that put a lot of pressure on the stock for Delta. United Airlines reported earnings, by the way, here after the close. They did well. I don't know where it's trading at the moment. Do I have that set up? Oh, 86. So United Airlines really strong here with earnings. Beat on revenue, beat on profits. Not too bad there for United. So that's going to start higher, right around 86 tomorrow. A couple other names and I'll let you roll. You got Netflix higher. These guys have earnings on Thursday. Okay, here's your warning, okay? I look at everything. I know you guys think, oh, he's just trying to see like he's somebody, he's paying attention to the stock market, but I seriously look at everything. Netflix is going to report on Thursday. Today they announced they were raising prices 13, 18%, something like that. You're going to pay more for Netflix is what you need to know. Stock was higher. You really need to understand this stock if you're going to be invested in it, buying it, or considering buying it before earnings. Here's how Netflix works. I've studied this upside down, left and right. There's been 66 total earnings reports. If you go back and look over every single one of them, I did. So here's how this works. The first quarter earnings, snoozer. The second quarter earnings report, snoozer. The third quarter earnings report, snoozer. Nothing happens, meaning there's a fraction of a percent change. Stock reports the earnings, and the stock basically doesn't move a whole lot, with some exceptions in there. But if you take the average, the stock doesn't really move first quarter earnings, second quarter earnings, third quarter earnings. They're getting ready to report fourth quarter earnings. You better understand that this stock moves almost 13% on average after reporting their earnings. What does that mean? For those of you watching here for the first time, what that means is you see it here. And on average, when they report earnings, it's a 13% move higher or 13% move lower. In this case, the average move over the last 66 reports, which is everything that they have to offer, is a positive move of 12.13% or 12.115, somewhere very, very close to that. And so what happens is you could very quickly get in trouble. Now, be careful, because if you look at where the stock started before it reported earnings, meaning what happened before or leading up to earnings, this is rare. This is about a 50% gain. Can I actually do this here? You got about a 50% gain. It's got to be 52%. I was close. Leading into earnings. That I can't say has happened as quickly as this is. You can't go back and look at any earnings period where you got a 50% rally just 2 weeks leading up to earnings. So this one's really, really going to be interesting here. They beat on earnings 85% of the time, just so you know. They beat on revenue 62% of the time. So this is just for fun, right? I'm just pointing out these kind of interesting things, but be very careful if you're thinking, oh, I'm going to get me some Netflix here, and they've got earnings coming out on Thursday. I promise you we'll cover it for you. If not Thursday, Friday then. United Healthcare, we covered that one already. Remember yesterday we said 91% of the time they beat on earnings, so they did that again. They confirmed their full year guidance, so that was positive for them. That's what helped the healthcare. I covered that a minute ago. That's what helped healthcare there. A couple other weird names. CVS down 2.5%. Walmart and CVS are not getting along. Looks like Walmart's going to leave their pharmacy system, the whole, digital system they got there. Tilray, pot stock was lower by 17% today. Today was the first day of the lockup ending for insiders, for people that were that already own the stock, institutional investors. Remember Canopy Growth the other day? They said they have someone that owns a boat ton of their stock. They said they wouldn't be selling. Looks like some of the insiders took the opportunity to sell their Tilray stock today. Canopy Growth, by the way, they got their license, first one, to open a hemp plant in New York, not New York City, but in New York. Take-Two Interactive didn't really do much, up 1.5%. They're going to pay $41 billion over the next 7 years for a license with the NBA on their NBA 2K game. Boy, that gaming stuff. Do you follow gaming? by the way? Do you follow gaming stocks and all that? They are just incredible what they're doing over there. Sherwin-Williams down 4% on the day. They lowered their guidance. And Sherwin-Williams is sort of like a barometer of the consumer. So you're going to see when Sherwin-Williams is weak, little areas of the market will take little hits like that. Doesn't seem like it's that big of a deal. What is a big deal is PG&E down another 17.5% today. They're going to be filing bankruptcy. Or there's not much else to say there. We covered eBay, did we? Yeah, we covered eBay and the whole idea of that trend changing. Discounted stock. It's a discounted stock that analysts are pointing out have stopped moving lower during an extreme selling pressure in the market. It has not sold off. And fundamentally, if you like to follow that thing, trading about a 13 PE, that's a discount to its competitors. So that's not my opinion. That is, it's just stuff that I like to come across. You know what I mean? Anyways, look, we still got the government shutdown, longest government shutdown in history. If you want some stats on that, we did that yesterday in the closing beat. You got trade discussions, almost non-existent. You got Brexit. They are seriously just making this up as they go. If you're interested in that, I'll cover it. But they voted no today on Theresa May's, breakup with the EU. I'm not going to get started there. Bad enough with the politics we got going on here. I probably don't need to cover theirs. Earnings. So tomorrow we got earnings from Bank of America. Let me cover this real quick. Earnings from Bank of America, because it seems like some of you guys are interested in the banking stocks. So took some notes. Bank of America, they're going to report tomorrow. What's interesting is when they beat on earnings, the stock is typically lower. They beat 75% of the time, just if you're interested in those stats. When they miss on earnings, the average move is 3.5% lower. So you're asking for some volatility there if you're going to participate. What else did I cover? Goldman Sachs. So Goldman Sachs, we talked about that yesterday. They're the most positive bank as far as beating on earnings. They beat 89% of the time. They beat on revenues 75% of the time. It's kind of interesting. Again, it's just for fun. It's not what we do here. Just like pointing these sort of interesting things out so we can follow through and see what happens. See how you guys like it. Airbnb, they're going to go public this year, Jaron. So Airbnb came out earlier today. This was a long day. Was it today? I think they came out earlier today and said, hey guys, we've been profitable for 2 years. Isn't that coincidental? Right before they're going to go launching to go public, they've decided to just start talking about more of this. Totally normal. They will be going public this year. Sorry, not this week, this year. Vegas. All right. Nice. JP Morgan's earnings were a lot different than Citigroup's earnings, Tiagio. Yep. Vegas for the Super Bowl? Dang. I gotta do the Super Bowl at the Cowboys Stadium. I mean, I know I missed it, but I mean, I'm just saying when it comes back. Cool. Looks like I covered it there. Great. Well, I'm sorry. I rambled a little long today, I think. I didn't mean to number dump on you, but that's what we got going on tomorrow. PNC Bank, U.S. Bank, Goldman Sachs, Schwab, BlackRock, Bank of America, all reporting before the market opens. And then we got the railroad tomorrow, CSX, and Alcoa, by the way, if you like steel. So can you give your opinion on Facebook? All of them, all the FANG names. Remember just yesterday I said, what happened to the FANG stocks? Not one of them was participating. Facebook was. It continues to break out of this downtrend. I would keep the same comments, sort of like eBay. I know this is a completely different story, but if you look at Facebook, I know it's faked you out a few times, but Facebook is clearly moving out of this downtrend now, severely discounted. And notice just through the time period where the market was selling off aggressively, this stock just basically moves sideways in a wider range. So it let you know that the bulk of the selling, the people that want it out, are now out. And it really seems like Facebook's trying to turn the corner there, just from looking at this. Facebook was positive yesterday. Remember when no other FANG stock was? Today, every FANG stock was higher, 3.5%. I don't think it even made the news. 2% on Apple, 3.5% on Amazon. Netflix, of course, higher by about 6.5%. We already covered that. And Google, 3.33%. So really good strength from the tech stocks. That's why you see the Nasdaq up above there or off to the side right now. being stronger than the rest of them. Straight across, just everything nice and strong there. Time in the market. Yeah. This is fun to cover, right? Like, I just enjoy it. I'm here because it gives you an update. If nobody watched, I'd probably still do it, to be honest with you, because it keeps me engaged. I love to understand everything, what's going on, not only for our customers, but I'm just into it. But at the end of the day, right, this show is not about you trying to time the market. If you want to have a separate account and play the games, with your, like, a smaller account, or if you're an active trader, then that's one thing. But as far as what we do for retirement, we are not actively buying and selling as I come up with these suggestions there. Although I think you'll like Thursday. Thursday, doing the open house here at 8 o'clock, I'm going to make sure I stay late and make sure I have something interesting to share, because going forward, I'm going to share this only with our customers, but I'd like everybody's opinion. And I think what better way to get an opinion than to just share it with everybody and watch the lovely comments come in. Jose, I'm putting together, remember a couple days ago, last week, I talked about the markets recovering so quickly, a 10-day rally being so quick. Actually, I'm just a little behind on it, but I'm putting together a whole thing on what does that mean? What are the stats behind that? How many times has it happened in the past? What happened after that? What did the year look like? I love that sort of thing, so I'm working on it, but it's a lot. We're testing our sort of different way of creating data here, so I'll be hopefully sharing that with customers soon. Thanks for mentioning the ETFs. Well, if you notice, there's a pattern every day in this class that we do. Number one, I talk about the markets, show you where the markets are at, the broad-based indices there. Number two, I go through sectors, and I tend to use sector ETFs to do that. You can also see the sectors below. And then number three, I'll go over individual stocks, and then if I want to stick around and answer questions, I'll do that afterwards. But that's when I use the ETFs. Just easier on the screen for me to show you the ETF or the most popular one to cover that, rather than try to pull up the whole sector and go through stocks. I don't think that's very interesting for the general viewer. So that's that one. Wow, okay, you guys are, oh, sweet. I love it. On a non-economy related question, do you play the trumpet? Where do you see it up there? I don't play the trumpet. We have two trumpets in the office here, which I didn't know. There's one way up there. This set, by the way, if you've never seen it, goes all the way up. So you can only see so much, but there's a trumpet up there. I do not play the trumpet. I try to play the trumpet. It doesn't sound like a trumpet. Do you have videos on investing more than what you need for retirement? Maslam, that's actually close to a topic. I would say mine will probably be a little more in detail for our video library. If you're one of our customers, like every night until like 1 o'clock in the morning, 2 o'clock in the morning, the programmer is just ridiculous. We're working on a video library. It might be a little rough to start, but I want to use that to do these sort of videos that are more particular and detailed and quicker for our customers. So I do have a laundry list. That is on the laundry list, by the way. More number dumping. All right, cool. Well, hey, the missus is bugging me now, so I must be late for dinner. I will be back tomorrow, of course. We'll do this all over again. If I helped you in some way, hit the subscribe button. I really, really would love that for later on this year when I speak at some conferences. I need that data. I don't care about what happens, here, just to be able to show that. I've got some really cool discussions I want to do later in the year. I hope you'll hit the subscribe button for us. If not, that's cool too. We'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.